Mr. Selby, how are we, sir?
Very, very good, sir. How are you?
Not too bad, not too bad. It's been a good week. It's been a good week for lots of reasons, I think. Not to mention the nickel price seems to have woken up again.
Yeah, no, the whole complex. Last time we were talking, things were on the way down, and one bad U.S. economic number, which caused the U.S. dollar to weaken. And all of a sudden, every metal in the base metal complex is up 5 to 7% in a week. So no, it's good to see. And again, it's one of those things, the importance of not to try and time things too cutely, because, these things can come out of nowhere, and then boom, all of a sudden, you're trying to play catch up after the market started to move. So
yeah, I mean, last week felt a little bit like doom and gloom, quite frankly. Evergrande, China was going to collapse. There was going to be a meltdown. Or melt up, depending on which economist you listen to. But things are back. We're back talking about fundamentals again. So why don't you give us the kind of the news, price, and what's happening in terms of supply in the market?
Yeah, so I mean, nickel, back up towards $9 a pound. After being close to $8 a pound last week. I think this morning we're trading around $8.90 or 19,600 for those of you who are on a per ton basis. Again, like the key thing here, and we've been saying all along here, the fundamentals are pretty supportive of where the market is. So, inventories continue to tick down. We're now less than 150,000 tons of nickel on the LME, down to 147,000 tons. So, pretty much 1,000 tons a day, plus or minus is coming off the exchange. And again, this week caught up with a few of the major players, and physically there's they're pretty sold out. They've got some spot volumes, and what spot volume they have available, they can get a pretty hefty premium for. So they are a very happy bunch. So and I think part of the momentum was the week before China was on holiday for a week, and they sort of showed up Sunday, Monday with the market moving in one direction, and they kind of threw some fuel on the fire, and away we went. So, which was great.
Fantastic. Did you attend the Macquarie Conference?
This year I was really hoping to get it over for LME week. So, like to me is one of the weeks I really look forward to, because you've got producers, consumers, traders, all, and you're out and about at various events for a week. And, again, even when you've got a good personal relationship with people, everyone talks their book a little bit. And so, the fact that within the same time frame, you can kind of, ask people who are in 3 different parts of the market about where the market is, it allows you to really triangulate around, where things are at. So unfortunately, not being there in person, COVID cases in the UK are still just a little bit high, but I know things are open up back to normal. Things in Canada are still very, very low. So I thought, I'm going to be over in mid-November, so I'll go then. But no, the one of the key events in LME week is the Macquarie seminar, and it gets usually very well attended. And one of the things they always do as part of that seminar is do a poll of the audience. Again, not particularly scientific, but it's a good sort of pulse in terms of where sort of consensus is. In fact, I kind of use it as a contrarian view. If people are wildly bullish, it either means things are going to be flat to over time. That seems to be kind of how it's played out. So the copper was once again the everyone's favorite long position. But what was interesting is there was also a very large portion of the audience who thought that you should be net short copper coming into the current year. So copper was the favorite long, but nickel was actually the best net long if you looked at long versus short in the audience. Makes me a little nervous that was the case. I had assumed people would have said it would be trading steady into next year. And they also had, of the various buckets, one is prices going down, one price is going down a little, one price is going up a little, and one's price is going up a lot. And a lot being, north of $21,000 a ton, which would be almost, on its way about $9.50 a pound. And almost 40% of the audience thought that's where prices were going to be next year. So either we're going to go sideways for a year, or we'll see, we may even see a leg even, well beyond that, because again, I'm pretty sure most of that 40% doesn't think prices would be going up 15 or 20%. I don't have my view yet for next year. I think I'm confident that we're going to break through $9, but I think we do get stuck in that $9 to $10 range. But let's see where we end. Where we end the year in terms of demand. From the various sectors.
So I literally got off a call this morning with someone in the battery metal space, a miner. Their big message they wanted to get, or one of the big messages they wanted to get over, was around the whole carbon taxonomy, right? They are not concerned. I think they're slightly overjoyed, but they're concerned at the sorts of the scale of the numbers being talked about by various governments in terms of not just carbon pricing, but in terms of the taxations on some companies, these incentives for others, and trying to get a sense of where that's all going to settle. Was there any sort of conversation during the sort of LME week that on that topic?
Yeah, no, there were. It was a central focus of a number of presentations. It is an issue that at the largest companies and all the way down, is a pretty fundamental issue. And so, what was interesting is in Macquarie analysis, tried to take a look at, based on the carbon pricing that's out there, when you look at sort of the lowest versus the highest carbon producers, or the lowest versus the median, to try and get a sense of, okay, if we do go start taxing carbon, what kind of premiums could emerge for the various products. So, for steel, for example, it's about $100 a ton on something that's historically traded between $400 and $800. The nice thing for nickel, nickel was one of the larger premiums at over $2,000 a ton. So at nearly $1 a pound, as a potential carbon. For those of us who've got projects that could be potentially lower carbon, really speaks to what the opportunity is if you're able to start thinking that way in terms of, okay, how do I pick up low carbon assets? How do I build low carbon assets? Those of us who are in the fortunate position to be there, it's pretty exciting, because even at 25 or 50% of that number, it's massive incremental revenue that would fall right to the bottom line. So
it's kind of interesting, this topic, and I want to talk about China in a second, but the Chinese potentially are going to find themselves with an unfair advantage here, because in terms of measuring and applying those whatever international rules around this carbon taxonomy, it may not be a level playing field, I guess is where I'm going. I think that's what some of these CEOs are a bit nervous about, in terms of, do you have different pricing structures within these economies? And what's that going to mean for countries and companies and miners in the West?
Oh no, for sure. I mean, I think you're going to, the world will kind of devolve into, lower carbon trading blocks, mid carbon trading blocks, and then we don't really care about carbon trading blocks. And you'll see, you'll see products, get sorted out between those markets. And it'll be the level of carbon taxation between sort of those blocks that'll determine, what the marginal pricing is between, each of those blocks, because there will have to be some volumes that will have to flow from one to the other, because the supply and demand within each block for each commodity won't be perfectly balanced. So, that's my view in terms of how I think this stuff shakes out with again, over the long term, the low carbon stuff's really going to win out. I mean, China, we're seeing them make real cuts in their economy, as they, attempt to hit, certain carbon goals and certain, minimization of coal burning, which is obviously a massive, airborne pollution issue in China.
Yeah, interesting times ahead, and I suspect no decision is going to be made anytime soon. But it is of concern to players in the market at the moment. Let's get on to China. Okay, as I mentioned, referenced earlier, there's been a few events. What's the impact of the Chinese curtailments on the world, as you see it?
Oh no, it's been fascinating to watch so far. So, again, in terms of iron ore and, steel is one of the big targets, because steel, on its own is one of the largest, carbon footprint operations. And again, particularly steel produced in regions where you have a lot of, primarily coal power, and then there are some regions where that is the predominant form of electricity, and so you're seeing 25 to 30% reductions, in that area. And again, numbers just came out this week in terms of what what the governments are expecting, over the next coming winter period, which is where the airborne pollution is at its worst. And so, it's in some regions you're going to see a 30% cut. So that has implications on iron ore, on met coal, and we've seen, iron ore was trading at some pretty crazy prices earlier this year. We've seen that come off. Conversely, we're seeing in metals like aluminum, where China's basically, turned that into a no-go zone for most Western producers, for a very long time. All of a sudden, you've got a significant amount of marginal capacity coming out of the market in terms of plans or future expansions. You're seeing that coming out of the market as well. And so we're actually seeing restarts of smelters that have been shut for a very long time in the West, because the aluminum prices are now at multi-year highs. Which again, is I think has caught the market, a little bit by surprise. So, again, we'll sort of see how that plays out. But these are real curves that are starting to have some real impacts in various marketplaces. So, you really kind of need to think about, okay, what is the so what, for your particular commodity. That you're investing in, of these kind of moves by China.
So we've talked in the past a lot about NPI, and people can go back and reference some of the background to that story here, and obviously the need for coal to the coal power for that. What are we seeing actually in China with regards to the domestic NPI situation? Yeah,
no, I mean that's in the nickel space, where it's sort of there's a twofold impact. So one, stainless steel is being impacted, alongside regular steel. Again, not to quite the same extent, but we saw a drop in stainless, output in stainless output in China in September by nearly 20%. Which obviously is going to impact demand for nickel within China. But on the supply side, we saw an even larger drop in NPI output, because again, it's a high carbon product, and if the power is coming from a coal-fired power, it has a very, very, very large, that gets you up to 80 tons plus of carbon per ton of output, and so that dropped by 25%. So annualized, that's almost 100,000 tons, or 4% of global supply coming out of the market in 1 month. So that's where we've seen nickel continue to be well supported, and inventories and pricing and premium all sort of pointing to, again, it can relatively continue to be tight market today. So for nickel, I would say it's sort of net slightly positive, because again, next year, as we see Indonesian NPI output increase, I think that was going to squeeze Chinese NPI anyways. And so the fact that, having some power curbs is going to make it that much more expensive, it'll allow the NPI production to contract relatively quickly in China, which again is one of the, which, I think will keep the market balanced next year. Some analysts are, again, like they did in 2021, had massive surpluses forecast for 2021, which has now turned into, probably the biggest deficit that we've had to date. I think for 2022, we're seeing surpluses forecast from some analysts now. But again, I think this NPI squeeze in China will allow the market to, stay relatively balanced next year. That's sort of my initial pass of, where I think we're going to be in 2022.
So you mentioned air pollution in the context of China a second ago. We've seen a few headlines, but I wonder what the reality of the situation is in the context of what they've got to do in terms of producing all of this stainless steel. Do you think that they are serious about the air pollution problem, or will it come down to numbers in the end?
No, they're pretty serious. I think these kind of cuts. We have seen the impact on physical, and again, it's more steel than the steel market's 50 times bigger than the stainless steel market, and we have seen real world impacts on that. And again, the Communist Party in China is focused on one thing: is staying in power with as little turbulence as possible. And for the middle classes, air pollution in major cities like Beijing are, a massive, massive issue. And so, they've realized that they have to be seen to be, and actually demonstrate, concrete steps on this place to be able to say to the population, look, we're doing everything possible to improve, the air quality in the big cities. So, please don't get upset, and, please don't start protesting. So it is, and having been in Beijing 10 years ago, during one of these temperature inversions, it's disgusting. It's, our flight got canceled initially because it was too smoggy. We got to fly again the next morning, and we landed. And they have twin runways at the main airport in Beijing, and you could barely see the planes landing on the other runway beside you. It was that thick. It was it was disgusting.
Oh boy, yeah. I think I did the same. I think it was back in 2005, though, long time ago. Hey, okay, so that's kind of interesting if they're serious about it. Other topic, we're going to stick with a little bit of China this week, really, isn't it? Let's talk about EV sales. I mean, how's that going? Is that giving us any clues?
Well, the good thing on the and again, what will help nickel relative to some of the other commodities, again, is a massive driver in nickel demand growth is the EV sector. So and again, in terms of more demand coming down the pipe, so sales, while overall car sales were down and car production was down year over year, month over month, EV sales for the month of September were up 144%. For plug-in hybrids and battery vehicles, up 181%. So nearly triple the sales in China, where they were in September. And remember, September last year in China was not, they were back wide open again. So, it's not really a COVID affected number. So, again, these new shifts, when they come, once they start to gain some traction, they almost always happen far faster and get far bigger than people expect. And again, the nearly 15% nickel demand growth we've seen this year, it was something very few, if any, people than perhaps me were forecasting for this year. Again, I think the surprise, for next year is going to be another, very large demand growth, just underpinned by what's happening in the EV sector.
It's kind of interesting, actually. There was a great question posed by one of the percent members in the kind of the chat room, which was around Tesla and its dominance versus the other OEMs, getting up to speed real quick and becoming meaningful competing players in the space, and what that's going to do for the nickel market specifically, as we're here to talk about today. And I think there's a realization that perhaps they aren't as far behind Tesla as Tesla investors would want to believe. So, what's the news in the marketplace with that? Are you finding more conversations happening? Was LME week giving you any kind of clues as to the number of conversations from OEMs desperate to secure their supply chain?
Oh, I mean, I can tell you with the Canada nickel hat on, the interest from North American automakers, is quite intense. They're all in on this. And so they realize, in terms of securing capacity all the way through the supply chain, and what they've seen on the chip side, I think has underscored the fact that we can't take our supply chains for granted. That as long as we're going to build the cars, all the pieces will show up at the right time and right place. And so, I think they've all flagged raw material supply, particularly in nickel, as a key issue. And so, again, in China, we've got nickel consumption in the EV sector, is expected to go up to around 30,000 tons of nickel in October, and that's a 75% year-over-year increase. That kind of run rate is nearly was approaching 400,000 tons, which is more than double where it was a year ago. And then also you add in, you've got nickel use in batteries, in other markets up very substantially as well. So it really is underpinning some pretty strong demand growth potential. And again, with the market, if we end up another 50 to 100% next year, that alone, assuming stainless steel and the rest of the market stayed flat, would give you somewhere between 8 and 15% nickel demand growth without any help from any of the end uses. And again, given what we're seeing now, the markets for those should stay fairly robust again next year, given how low inventories are right now.
So do you think the market is finding its feet? Because there wasn't so long ago we were having conversations about whether governments need to kind of step in and get involved, incentivize in whatever form that looked like, compared to China, who seemed on the ball, securing and tying up assets, companies, supply of whichever EV materials they needed from Africa, Australia, Asia, etc. Is the kind of North American scene now feeling a little bit more on the ball and actually coming together at last?
Yeah, no, I think again the North American automakers are sort of 2 years ago kind of talking about it. A year ago, kind of doing something about it. Now, kind of full on in terms of the march going on. And I think again, when you look at what happened in the lithium space, in the number of deals for lithium assets in the last 12 to 18 months, you're going to see, I think, a similar activity in terms of all the other battery components, graphite, nickel, what have you, in terms of, again, each of the supply chains trying to grab as much as they can. So again, I think the North Americans realize that if they, stay asleep for another 12 to 24 months, they'll wake up and find out that the Chinese have grabbed not only all of the dominant supply in Indonesia, but they've now gone off and picked off a bunch of assets in the rest of the world as well. So it'll be really fascinating to see how it all plays out.
Yeah, it will be. Okay, and we'll maybe finish off with a little bit of company news. There is some.
Yeah, so again, I think underscoring just, in terms of, nickel sulfide assets, we've seen a number of deals happen so far. And this past year, we've seen, Noront still in a bidding war between BHP and Wyloo. There's been no news on that front, but a small mine in Western Australia, a sulfide mine called Lanfranchi, which was originally owned by Panoramic. It was peeled out by a private equity firm called Black Mountain Metals, which has also got an interest in Poseidon nickel. Their company called Tembo Capital, which is another private equity group, is joint venturing with them on getting that mine restarted. So, I think it again speaks to the opportunity when you're seeing, sort of more, I would categorize both those groups as real private equity, not just high cost finance private equity. And so when you're seeing, real private equity dollars come into a mining space, it's not a big mine. It's not a huge deal, but I think, again, it's symbolic of, okay, people realize, there is a real scarcity of nickel sulfide assets now, and you need to get your hands on whatever you can. Now, because things are going to start moving in the next 3 or 4 years.
Yeah, Tembo Capital, good team, very technical team. Mostly get it right, so not a bad deal at all. Okay, well, I think that's us for the week. A lot on China there. You guys have had a little bump this week. Was that all off the work of the announcement last week, or is it the market?
Yeah. No, I mean the market itself has kind of moved higher, but I think the market recognizing what a sizable impact that recovery change has had, has on the value of the project, I think has given us some more momentum. So, where everyone's bounced back a little bit, we've had a major bounce back. So, hopefully with more news flow coming in the next few months here, we'll have, continue that momentum and, push back to where we were last February. So,
okay, here's one for you. I've been asking this of CEOs of big companies, right? And we ask it of you is, investors like growth stories. Have we had all the growth we're going to get from you, or is there more to come?
Oh, there's lots more to come. We are expanding Crawford and the resource that's there, and that'll be 50 to 100% larger for the feasibility study. And then, we've been really starting to talk about the last few months about the district scale potential we think we have in Timmins. And so, again, I think there'll be more news flow coming down that front. But we really believe that, and so we want to turn Timmins into the next Sudbury, which would be the largest sulfide camp ever. So we'll see how we go.